Have you guys noticed something? I'm currently making money while the market is going down. I'm literally profiting as the market goes lower in this account. And there's some specific things that I'm going to teach you in this video, which literally nobody else on YouTube is talking about because they're trying to go for views, what's popular, the next best stock. But on this channel, I'm not really interested in that. I'm interested in getting results for you and my Discord community and for myself. Okay, so check it out. I'm literally up 0.32% on a day where the market is down 1.32%. Literally a 1% beat today. So while the market is going down, my portfolio is literally going up because I'm using hedging strategies. And in one of my most recent videos, I talked about in the money covered calls. So in this video, we really need to talk about using in the money covered calls and also using call credit spreads. Basically, calls should be used to your advantage. You should be selling call options and profiting from this downturn. As this market goes lower, as we see lots of risk in the market, I basically have no worries, okay? So in this portfolio, I actually made money. And then in my main portfolio, which is the YouTube portfolio that I've been working on for a very long time, I have done really well today. So QQQ is down, wow, over 2%, just crazy, right? And that's because I've been saying this for a very long time, okay? I hate to toot my own horn, but just honestly speaking, tech is overvalued, okay? There is a lot of technology stocks. If you take a look at them, they're 1.4 times more expensive than the general market, the S&P 500, okay? So it just doesn't make sense to me. So I've been kind of getting out of technology stocks. Yes, I have Apple and I bought a good amount of Apple when it pulled back. Again, I'm just being honest. I love technology, but I'm trying to be more diversified right now. And if you want to follow my trades and also get really good returns and basically see everything that I'm buying and everything that I'm selling, it is the first link in the description. If you watch the free training, you can schedule a call with my team. You can actually watch everything that I do and get access to me all market hours. I love doing this. I love being a coach and I love getting people results. And I'm not BSing here. I'm actually positioned in a way to make money as the market goes down, okay? And that's because I'm not a genius. I don't know what's gonna happen, but it's pretty obvious, right? If you look at the market, if you look at what's going on, and I don't wanna get into the macro discussion because this video will be about 30 minutes long. I respect your time. I wanna get to the point. QQQ, down. SPY, down. My portfolio, down less. Why? Because I'm doing covered calls that are generating me income. So for example, if you look at Apple right here, Apple, I made $150. I opened this position today, actually today. So if I actually open up this position, again, I want to show you my receipts, all right? I don't like to be all words. 3 hours ago, $510 collected premium, and I'm up $150 so far, and tomorrow I'm probably going to be up another $360, okay? This is not actually an in-the-money covered call. It's actually just a close-to-the-money covered call. So the difference between an in-the-money covered call and a close-to-the-money covered call is an in-the-money covered call would mean like here's a stock, it's at 176. An in-the-money covered call would mean I'm going to sell 175 strike, okay? Because when I sell a strike price that's lower than the current stock value, that's called an in-the-money covered call, okay? And because I sold the 180, that's essentially an out-of-the-money covered call. However, if you'll notice that the delta here, now it's low, but it was a little bit higher. It was a little bit higher today because obviously this option right here has a crazy high theta. So theta here is $25 per contract per day. So, I mean, this thing is going down in value really, really fast. And specifically since it expires tomorrow, this theta is going to be really insane tomorrow. And theta is basically how much this option is decaying in value. And because I sell this option as it decays is actually a good thing because the way basically it works when you sell options is like selling a car. So imagine that you have a really nice McLaren, okay? A McLaren is like a $400,000 car, right? Or $300,000 car. Imagine that you borrow it, sell it for $300,000, and for whatever reason, McLaren has some scandal, and now the cars are worth $200,000. So what you do in this example is you sell it for $300,000, you buy it for $200,000, and you give it back to the borrower. You've essentially profited $100,000 because you borrowed an expensive item, you've sold it for an expensive price, and then as it went down, you gave it back, okay? That's the same thing with options when you're selling them. So this covered call, you sell it expensive, and then as it decays, it's good because it's going down in value. You can buy it back at any time and just have a profit. I mean, I can buy this option back right now. I'll have a $150 profit, but I'm not going to do that. I do like to wait until expiration. So in this scenario, what I'm going to do is I'm just going to wait until it expires, which is tomorrow. I did a really, really short-term trade here. That's because I'm really nervous where the market's at. I just want to make lots of short-term, quick money and just get lots of premium coming in. I really want to see that premium rolling in because, you know, where the market's at, I'm kind of worried. Obviously, I've been taking some money out of this portfolio, been adding it to my other portfolio. I just want to be diversified amongst brokerage accounts. But still, I mean, this portfolio is doing quite well. I mean, years to date, I'm still up a lot of money. And specifically, I've been doing a few different things in my portfolio, actually. So I've been into a lot more value companies. So for example, I have Bank of America. I'm selling put options of Bank of America at a $28 strike. I'm also doing covered calls at the $28 strike. So I'm basically doing a lot of more value companies. And I was recently asked in my community about value stocks, like what makes a stock value versus what makes a stock like a growth stock. And that basically all comes down to the price to sales ratio as well as the price to earnings ratio. So something that you'll notice right here is, everyone's talking about NVIDIA, and here's NVIDIA right here. But honestly, I'm not a fan of NVIDIA. In fact, I'm short NVIDIA. That's part of the reason why in this account right here, which I was showing you in the beginning, I'm making money. I'm doing something a little bit risky, which is really not for most of you YouTube people. It's not even for my Discord people. It's really for my top tier bootcamp members that really have a solid understanding of option trading. They have 6 months of profit in a row, like 6 months in a row. Then we can get into something called naked call selling. I don't really advocate it for literally 99% of even you guys watching, because it's really risky. But essentially, I already knew this. I already knew that NVIDIA was not going to have the best earnings. Even if it had okay earnings, it was not going to pop up that much higher, which is why I ended up selling. Well, I sold $650 calls here. This is kind of like a no-brainer play. I mean, obviously it's going to be successful because it's super out of the money. So I was like even more safe than I needed to be. But again, like I'm risking a lot here. I have 25 contracts here, quite a lot of money. And I just know, guys, everyone's making those NVIDIA videos. Everyone's like pumping YouTube videos for the views, because YouTube pays us. But I don't really care about the YouTube money. I really don't care. I mean, look, NVIDIA, I'm not going to pump a stock to get more views. I really don't care, okay? So it just doesn't make sense to me. NVIDIA is already, like, if I look at the statistics, the reason we got into this conversation was if we look at the statistics, I mean, look, the forward PE ratio is 60, the current PE ratio is 245. I mean, you got to be kind of insane. Like, you have no financial education. If you're watching other YouTubers and they're like, oh, buy NVIDIA, like, please unsubscribe to those YouTubers. They don't know what they're talking about. I know NVIDIA is innovational and I know they're in AI. I don't care if the PE ratio is bad. It doesn't matter, okay? I don't care. It's like real estate. If you go to the best San Francisco, okay, booming market, whatever, right, tech, right? If a house costs 50 million, it just doesn't make sense. I don't want to buy a house for 50 million. I don't care about the neighborhood. I don't care if Mark Zuckerberg is your freaking neighbor. If the house is 50 mil, probably overvalued, okay? I mean, it could be worth 50 mil, but if the whole neighborhood has houses that are 2 mil, 3 mil, and this house is 50, come on, you have no idea what you're doing, okay? It doesn't make any sense. Why would you invest in the most expensive house in the block? You should be buying the cheapest house in the block and kind of like repairing it. Yeah, not a real estate expert, but just trying to paint that picture for you because you guys you got to get it. You got to get this, okay? You can't be making these silly mistakes, following people, and NVIDIA's going to the moon. I'm going to buy some call options. Yeah, if you buy some call options, your pocket's going to be hurting real bad, okay? Don't do that, okay? I'm very simple. I'm going after consistent weekly, monthly income. I got no problems. My portfolio is going up steady, and when the market's down, I'm losing less money, and that's all I can really ask for, okay? So I'm asking to just beat the S&P 500, and I'm asking to do it on a good risk-adjusted basis, okay? I'm trying to have lower volatility, lower risk, good return. I don't know. Nobody can match that, okay? Nobody can match that. I don't know what people are promising. All nonsense, okay? If anyone tells you NVIDIA is a good stock, they're not investors. They're not investors, okay? It just doesn't make sense, okay? Valuation's off. Price to sales, 45. Like, come on now. Even Tesla, okay? If I look at Tesla. Now, Tesla's becoming actually a value stock. I like Tesla. I like where Tesla's going a lot, actually. If I go to the statistics tab right here, the forward PE is still high, but there's a difference, guys, okay? The forward PE is high here, but it's going to be coming down because Tesla's earnings are still going up a lot, which is also true for NVIDIA. But the difference is the price to sales on NVIDIA was freaking, what, 5 times more? And for Tesla, it's only 8.76. So this makes a lot of sense for me. It's not as expensive. All right, now one more thing I want to show you. I've been using OptionsFi software, and it is literally screening NVIDIA as a call credit spread. Now, they're saying 550, 555. This has been a suggestion here for freaking weeks now, okay? This expires on 9/1, so that's actually still going out to next week. 550, 555, I actually want to see where that is in relation to the Bollinger Band, because I do want to see, this software can be very aggressive, don't get me wrong, but the money coming in is absolutely insane on some of these trades. And the fact that call credit spread is screening well for NVIDIA, more reason to believe, because this is based on AI. I actually contributed a little bit to this algorithm. I know who built this software, and there's many different factors. I used to work at a hedge fund, long story. I used to work at PNC Capital Advisors, Philadelphia, and they had like a multi-factor model, okay, and those different factors. I know some of them, so I've contributed. Some of them are like earnings per share revisions, as well as like momentum scores, okay? So I didn't build it, I just kind of contributed a little bit to it. But, looking at NVIDIA right here, easy money, call credit spreads. Anyone who's buying calls, yeah, have fun burning your money on fire, okay? Just have fun. So NVIDIA, way overvalued, okay? Whereas Tesla, it's not overvalued. Although the price to earnings is high, the price to sales is not. So there's a very key difference, okay? You have to understand, people just look at price to earnings, oh, it's 1,000, it's 2,000. Yeah, but it doesn't matter. Some of these companies are growing very fast. Price to earnings doesn't matter as much as price to sales for technology companies. Now, sure, price to earnings could matter a lot more for something that's like a consumer staple or consumer defensive, right? Same thing. Coca-Cola, Johnson & Johnson, Procter & Gamble, these more dividend paying stocks, your price to earnings ratio is going to be more important, but not for technology, okay? So, for me, light work. I'm selling call credit spreads. I'm profiting on NVIDIA. You can actually see in this portfolio, I probably still have more NVIDIA. Yeah, I do actually. I sold a 600 and 605 call credit spread. This is a strategy that you guys should be implementing right now, because as the market goes down, utilizing call credit spreads, it's gonna bring in premium and give you some, give you a hedge essentially. So right here, 600, 605. I actually went very heavy here. So typically my Discord community, when I'm coaching, I'm showing all my trades live. I'm typically opening up trades that are suitable for my students. So many of my students, mostly men, 40s, 50s, right? Software engineers, business owners, 9-to-5ers, right? We have a good diversity of mostly guys, of course. Most of you guys are men, but a lot of people, they want to start with $5,000, $10,000, or $20,000. And I think that's perfectly fine. And that's why when I'm making spread trades, I'm typically not opening up such big positions, because this position right here, it's it's kind of big, 50 contracts. That's quite a bit of chunk of money. That's an entire portfolio for some people. And it just kind of shows you that I typically don't make big trades like this, but I really put my money where my mouth is. I literally put my money where my mouth is. I put 50 contracts here, credit spreads, and up $1,000. This is a position that I opened up not that long ago. And actually, this is an example of a position that I will be closing early. I typically don't close early. People ask me, how do you manage and close a position? I typically just let it expire up until Friday. But in this position right here, it just doesn't make sense to hold it, because I'm already up $1,000, 80%, and in just a few days, because this was an earnings play. However, not that I had a bad problem here, but I did kind of open up a position that's a little too far into advance. Should have opened up a little shorter term trade here, but not a problem. I'm up 80%, $1,000. So I am going to actually be cutting this trade tomorrow. So I have Monday and Wednesday coaching calls in my program. And then on Fridays, I'm just cutting positions and rolling positions out into the future. And a roll, by the way, is a really important topic. You should definitely type in Invest with Henry rolling, because if you know how to roll, you can make more money, or you can save yourself from having losses. All right, we also had a big PayPal play. Now, PayPal, I wish I would have put more money into. Looking at the size of the position I did, it's a big size, but I do wish I was a little bit more aggressive and did some put credit spreads. Now, this market, although I think it's expensive and I think we're probably going to come down here, I see some value stocks. PayPal, great value. Okay, I like where PayPal's at. And also, here's Target. Target is coming down a little bit. I did an in-the-money covered call, as I just discussed in a recent video. You have to watch on this channel. Target, $128 covered call. I'm up $1,300. So essentially what I'm doing is I'm using call credit spreads, which, you can watch a video. I'm going to drop it down in the description. And then covered calls in the money. You guys have to use both of those strategies. And if you want more help, if you want to follow my trades, it's the first link in the description. Thanks for liking this video. Thanks for being a subscriber with notification bells on. I'll see you guys in the next video.